2025 has brought renewed attention to the Iraqi dinar. Social media, private investor groups, and even mainstream financial outlets are buzzing with one big question. Is the Iraqi dinar finally ready for a revaluation, RV? The hype is real, but understanding the truth requires looking past rumors and examining Iraq's economy, banking system, and international partnerships. The Iraqi dinar is not just a currency. It is a reflection of Iraq's history, struggles, and resilience. From the golden years in the 1970s to the turbulence of war and sanctions, the dinar has experienced extreme highs and lows. Today, its value and potential RV are directly tied to the country's economic health and geopolitical strategies. A currency shaped by history, the dinar's journey is closely linked to Iraq's political and economic history. In 1970s, 1980s, Iraq had one of the stronger currencies in the region, largely due to oil revenues. In 1990s, after the Gulf War and international sanctions, the dinar collapsed, losing nearly all value. In 2003 onwards, post-U.S. invasion, the currency was reissued, but instability, inflation, and corruption continued to limit its growth. For decades, the dinar remained a symbol of Iraq's economic struggles. Local citizens saw their savings eroded, while international speculators labeled it a lottery ticket, hoping for an RV that might never come. Why 2025 feels different? Several factors have converged to make 2025 stand out. 1. Economic recovery. Iraq's oil production and revenue streams are stabilizing. The government has built foreign currency reserves, providing more flexibility in monetary policy. 2. Banking and financial reforms. The Central Bank of Iraq, CBI, has been working to modernize banking, control dollar outflows, and reduce the shadow economy. 3. International partnerships. Renewed U.S.-Iraq talks focus not just on security, but also on economic development, digital banking, and investment facilitation. These talks are seen by many as a signal that currency reform may be possible in the medium term. The combination of these factors has reignited speculation about a potential RV. But it's important to understand that speculation and reality are not the same. A sudden surge in the dinar is extremely unlikely without systematic reforms and stable implementation. The role of oil in Iraq's economy. Oil remains Iraq's lifeblood. Around 90% of government revenue comes from oil exports. In 2025, production averages 3.3 to 3.5 million barrels per day, with prices hovering between $78 to $85 per barrel. This stable revenue stream allows Iraq to build up foreign reserves, pay government salaries, support infrastructure projects, strengthen the central bank's ability to maintain currency stability. High oil revenues reduce the need for drastic monetary interventions, but they alone cannot drive a massive RV. Currency stability depends on complementary measures like banking reforms, anti-corruption policies, and dollar management. Banking system and dollar dependence. Iraq's banking system has historically been fragile. Most Iraqis rely on cash rather than banks, and a significant portion of transactions are conducted in US dollars. Challenges include corruption and inefficiency in the banking sector, a limited compliance with international anti-money laundering standards, a high reliance on US dollars for large transactions. The central bank's efforts in 2025 focus on addressing these challenges by digitalizing payments, controlling dollar outflows, and promoting local currency use in government contracts. These steps are critical to any long-term strengthening of the dinar. Shadow economy and its impact. The shadow economy, smuggling, black market trading, and unofficial financial networks, continues to drain billions annually. Militias, corrupt officials, and illegal operators profit from this system. This unregulated activity makes the official dinar exchange rate less relevant in practice, widening the gap between the street rate and the official rate. Addressing this is essential for any meaningful RV. U.S. Iraq partnership and RV speculation. The 2025 partnership talks cover 1. Security, protecting infrastructure and ensuring stability. 2. Economic development, encouraging investment, supporting banking reforms. 3. Currency stability, gradual de-dollarization, improved financial compliance. While the U.S. provides guidance and oversight, the decision to revalue the dinar ultimately rests with Iraq. Hype around these talks often exaggerates the immediacy of a potential RV. Reality depends on policy execution, political stability, and economic reform over months and years. Setting realistic expectations. The key takeaway for investors and citizens is clear. Do not rely on hype. Social media predictions are often speculative. Watch fundamentals. Banking reform, oil revenue, and anti-corruption measures are real indicators of potential currency strength. Think long-term. Any significant RV is likely to be gradual, not sudden. The dinar's potential in 2025 is rooted in Iraq's strategic planning, economic resilience, and international partnerships, not in rumors or short-term speculation. Iraq's economy in 2025. Iraq's economy is recovering steadily in 2025, largely due to stable oil production and international partnerships. Oil accounts for roughly 90% of government revenue and nearly 60% of GDP, making it the backbone of the country's financial system. The government has increased its foreign currency reserves to over $110 billion, giving the central bank more leverage to manage currency stability. This is crucial for controlling fluctuations in the dinar and reducing dependence on the US dollar. However, Iraq's economy still faces challenges. Unemployment remains high, infrastructure needs rebuilding, and political instability can affect investor confidence. Despite these hurdles, 2025 shows real signs of recovery and potential for longer-term growth. Oil production and its significance. Oil is not just an economic driver. It determines Iraq's global influence. In 2025, Iraq produces an average of 3.3 to 3.5 million barrels per day, primarily from southern fields like Basra and Kirkuk. Stable oil production provides the government with the ability to fund public services and salaries, build infrastructure and energy projects, strengthen the central bank's reserves to defend the dinar, encourage foreign investment. Oil revenue also impacts public confidence. When the government can consistently pay salaries and fund projects, the population is more likely to trust the currency, indirectly supporting a stronger dinar. Oil prices in 2025. Global oil prices in 2025 hover between $78 and $85 per barrel, providing a balanced scenario. Prices are high enough to sustain revenue but not so high as to create global supply shocks. These prices ensure that Iraq has consistent foreign currency inflows, which is essential for stabilizing the official exchange rate, reducing reliance on black market dollars, supporting long-term reforms in banking and digital payments. However, oil alone cannot trigger a massive RV. Without banking reforms, anti-corruption measures, and effective governance, revenue alone won't strengthen the dinar in a sustainable way. Diversification efforts. While oil dominates, Iraq has begun exploring economic diversification. Small steps include investment in agriculture and food production, expanding telecommunications and IT infrastructure, encouraging private sector growth with foreign partnerships. Diversification reduces economic risk and lays the groundwork for a stronger currency. If Iraq can gradually reduce over-reliance on oil, it will be better positioned to maintain a stable dinar and attract investment. Foreign reserves and currency stability. Foreign reserves are a key factor for currency confidence. In 2025, Iraq's reserves of dollars, euros, and gold exceed $110 billion, which allows the central bank to intervene in currency markets to stabilize the dinar, back government spending without excessive borrowing, increase confidence among domestic and foreign investors. Strong reserves mean that even if the dinar faces pressure from local markets or global events, Iraq can support the official rate, reducing volatility and making a potential RV more feasible in the long term. Economic challenges. Despite progress, Iraq faces structural challenges. Unemployment. Youth unemployment is particularly high, which can fuel unrest and reduce trust in institutions. Corruption. Mismanagement and bribery remain significant obstacles to reform. Political fragmentation, sectarian divisions, and competing power blocks can slow down decision-making. These challenges create uncertainty, making investors cautious. A stable dinar and any potential RV require consistent reform, not just high oil revenue. Summary of oil and economic impact. Oil revenue, foreign reserves, and stabilization policies form the foundation for the Iraqi dinar in 2025. However, 1. Oil alone cannot drive a major revaluation. 2. Banking reforms, transparency, and anti-corruption measures are equally important. 3. International partnerships, especially with the U.S., support long-term stability. The economy is showing promise, but patience and systemic reform are essential before a massive RV can realistically occur. Banking system in 2025. Iraq's banking system has long been considered fragile. A large portion of the population prefers cash over banks, and most major transactions are conducted in US dollars. This dependence has historically weakened the dinar and made speculation common. In 2025, the Central Bank of Iraq is focusing on reforms that include a digitalization. Government salaries and large payments are being transferred electronically, reducing reliance on cash. The compliance with international standards. Banks are being audited to meet SWIFT requirements and anti-money laundering protocols. The control of dollar outflows. Strict monitoring of foreign currency transactions aims to prevent dollars from being illegally sent to neighboring countries. These reforms are vital because even with strong oil revenue, the dinar cannot gain sustainable strength without a trustworthy banking system. Dollar dependence and shadow economy. A major challenge for the dinar is Iraq's reliance on the US dollar. Many businesses, imports, and even everyday transactions rely heavily on dollars. This dependence has been reinforced by years of instability, corruption, and mistrust in local currency. The shadow economy, including smuggling, black market trade, and unofficial banking networks, also undermines the dinar. Billions are drained annually, often benefiting militias or corrupt officials. Addressing these issues is crucial for any RV scenario. A narrowing the gap between the official rate and the street rate. A reducing black market influence. A strengthening the central bank's credibility. Digital banking, stricter audits, and anti-corruption initiatives all target this shadow economy, creating conditions for a stable currency. U.S. Iraq Partnership Talks 2025. The renewed U.S. Iraq talks in 2025 focus on multiple areas. 1. Security, ensuring infrastructure protection, stabilizing the country, and reducing militia influence. 2. Economic development, encouraging foreign investment, modernizing infrastructure, and supporting banking reforms. These talks are significant because U.S. involvement not only supports financial reforms but also signals stability to international investors. A stable environment makes the dinar more credible, even if a massive RV is gradual rather than sudden. Geopolitical implications. The dinar's strength isn't just about economics. It's closely tied to geopolitics. The stable Iraq reduces Iranian influence in the region. A strong oil output ensures Iraq remains a reliable global energy supplier. The improved governance and financial transparency make Iraq more attractive to foreign investors, including U.S. and European firms. By understanding these dynamics, investors and citizens can see that any potential RV is linked to policy, stability, and strategic planning, not rumors or online hype. Myths versus realities of RV. There are many myths surrounding the Iraqi dinar. 1. Myth: the dinar will skyrocket overnight. Reality: central banks move cautiously. Sudden revaluation risks inflation and public unrest. Any strengthening will likely be gradual. 2. Myth: social media predictions are reliable. Reality: online forums often exaggerate timing and magnitude. Official central bank statements are the only trustworthy sources.